Happy Earth Month. Earth Day is tomorrow. Just wanted to say Happy Earth Day, right?
That's right.
Hopefully you guys are all doing your little tiny acts, and you're doing that all throughout the year, but especially this month, I think the most impact happens. Everybody wants to do their 2 cents. So we're going to wait for some of the other speakers to come in. Meir, we were talking a little bit earlier. He's got some great innovation that he's investing in, and we were talking a little bit earlier about the wildfires, right? And you've got some technology that, I mean, it's a current topic, right? These wildfires.
Sorry.
Please come on in.
I didn't know we started.
No worries.
Oh.
Yeah. Dylan, we have one more coming. Got it? Okay. No worries. Oh, everybody likes coupons. So I'll introduce the panelists, and so I'll start from the left to the right, and please, if I pronounce your name wrong, don't feel shy to correct me and throw something at me or whatever's needed for that. Okay, so we have Michelle Adelman at the end there. Thank you for joining us. Michelle Adelman is an accomplished leader, having spent the last 10 years focused on driving economic development and creating employment opportunities for youth and women in emerging markets. As the founder of Accite Holdings, a boutique firm dedicated to building innovative business in a sustainable food sector. She has been instrumental in shaping a healthier and more sustainable food system in the US and abroad. I recently learned that your 2-year vacation in Africa turned into a 12-year love affair. It did. Yeah?
And I just have to make a quick connection.
Testing that mic. Is there a switch?
I also have to just turn it on. That would also work. So where's Joy? So Joy was just talking about sustainable investing. I was out on the Wild Nectar website. So if you go to any of the Botswana travels from Wild Nectar, you will be eating food from GoFresh, because looked at all of the safari camps, and all of those were GoFresh customers.
There you go. 35 years of business experience across industries. Michelle held key leadership roles, including Global Managing Director at Accenture, CEO at a US-based home and health services company, and Group Strategy Executive for the Pan-African Econet Group, right? And you founded some pioneering food industry companies, right? So I'm sure we'll hear all about them. You're also on some trustees and board seats and all kinds of stuff. We got a great panel in front of us, and I feel underwhelmed here, or, like in good company, basically, that is. Meir Rabkin, right? Again, correct me if I'm wrong. Meir Rabkin is the founder and managing partner of Blue Vision Capital, a climate tech venture capital fund whose thesis is to invest in early-stage startups intended to abate global warming by focusing on innovative, capital-efficient technologies that tackle our planet's climate crisis. Prior to launching his fund, Meir accumulated over 18 years of investment sector working. 18 years in the investment sector, working in large asset management firms such as McKinsey Investments. It's a $200 billion asset manager, right, or more, I think, even today. As well as several years in the banking industry with Investors Group, where he's sharpened his skills, and you were able to raise funds for your current business, right? Which is called Blue Vision Capital. If you saw his earlier session, he's got a lot of really cool innovations, including one that I think self-builds solar arrays, solar farms, right? And then one that detects wildfires before they happen, which we should talk after this. And last, but certainly not least, Stefania di Bortolomeo. It's my best Italian accent. Okay. Stefania is CEO of Physis, a seed-stage fintech providing transparent, sustainable data and portfolio tools globally. Named among Independent's top 100 climate leaders alongside Bill Gates and Stella McCartney. She's also featured in Innovative Finance's Women in Fintech Power List and FT Partners Women in Fintech Report. I also learned that you made a life-changing decision at 16 to either go to oil and gas or a more responsible business way. So that was a life-changing decision at 16. You were already a brilliant genius back then. And youngest to manage an impact fund in Europe.
Fund manager in Europe.
Youngest fund manager in Europe. So again, a distinguished panel ahead of us. I'll do my best to ask appropriate questions and make you proud. I'm a registered architect in California, and I'm a global director for Energy Vault. We do energy storage solutions. That's 2 cents about me. So this is FinTech. We're talking about finance and investments, right?
Oh, easy.
Please have a seat. No, you're gonna have to stand up for the rest of the time. There's a couple things I just want to bring up, things that hit my mind. Some of you guys have said it, some other people have said it. There's a term I hadn't heard before. One was conscious capitalism. It was the first term I heard today, so I'm going to use that. Impact investing is the highest growth asset class right now. Is that an accurate statement? I've heard that once or twice today.
It's correct.
Okay, there you go. And I think this came from you, Stefania. 25 prompts on ChatGPT is worth 1 bottle of water?
That's correct.
There you go. And 60% of people invest based on belief and values. So these are all things I'm learning while I'm here, so I don't pretend to know everything. Okay, so let's get started. The first question I have, we'll go from left to right, or yes, you're left to right. As sustainable investing moves from niche to mainstream, how do you define what counts as a truly sustainable investment today? And what should investors watch out for?
Yeah, it's a good question. And for us, the most important factor when we look at an investment opportunity is can we quantify the emissions, GHG reduction, or the impact they're having on a global scale. If you cannot quantify it, if you cannot measure it, for us that's already a red flag. The other aspect that we look for as well is the intentionalities as well, right? So what is the intent? Do they have any KPIs? Is this part of their mission? Is it part of their core strategy? And then lastly is the additionality, right? So by the mere fact of having this business scale, grow, expand its customer base, that is going to have a very strong effect on the impact. I mean, if you have, let's say, the best technology to reduce, carbon emissions, but that business is not scaling, it's not having an impact, right? So the additionality aspect is really important. So we really take a look at those 3 metrics, and we essentially try to stay away from companies or businesses or funds that would mention ESG but without having any meaningful KPIs to back it up, or any meaningful indication or intention. There has been, unfortunately, a bit of that, so I think you need to navigate wisely and avoid the minefields out there.
Do you use any of those ESG raters or rankers when you're looking, when you say that some of the ESG companies make sure that what they're saying is what they're doing? Are any of those rankers and raters out there, MSCI, Sustainalytics, some of these, do you use them?
Yeah, so we invest at the seed Series A, so some of the metrics don't always apply to early stage businesses. But we do use a few platforms such as Greenly actually to be able to do the measurements based on what is appropriate. Often we will measure the impact not based on where they are today, because let's say if you're investing in a business and they're just getting started, they have a couple of customers, pilot projects, the impact is not going to be big, but we could extrapolate that to what it would be at scale, and we match it based on their revenue projections. So that's kind of the science behind how we do our math.
Well, thank you. Stefania, same question. What would you consider counts as a truly sustainable investment?
Every time we make an investment that does not harm the planet or the people, that can be considered a sustainable investment. There are so many ways this can actually happen. For example, there are strategies that are called exclusionary strategy. You decide not to invest in specific sectors or industries. Or you can do an integration strategy. You can invest in anything that can actively be good. For example, companies that apply diversity policies, companies that have commitment toward reducing CO2 emission, or company that might be part of group like the UNPRI, or have signed LOI when it comes to labor standards. But there is also very important, not just the intentionality of doing investment in this way, but there needs to be some level of proof or reporting that this is actually happening. Today, sustainable investing is an umbrella term. There are so many strategies that can be under this umbrella term. The way you categorize these strategies is also based on the current idea of a portfolio manager. So very, very important. In the previous years, we've seen an exponential growth of so-called ESG scores. But ESG scores are extremely limited because they are almost arbitrary assessment made with sometimes very good logic by a single individual. Where what we're seeing the industry moving forward is more of raw data, objective information that can better assess a performance of a company. Sustainable investing today can be an investment made in green energy or investment made in a portfolio companies with a gender equality lens. They're both equally important, they're both making an impact, but the way we can assess one strategy, like a green energy strategy, towards a strategy that it's trying to push the agenda forward for gender equality, can be totally different parameters. The most important things is access to data, and the second thing is enabling a fund manager like you, for example, to make decision based on the intentionality and then provide proof back to investors. Again, my idea is a very broad approach, but as long as it's consistent and provide proof, it's sustainable investing.
So you mentioned like UNPRI and things like that. How much weight do you give then to some of those, certificates or programs that companies build into their governance strategy?
Well, UNPRI is an organization mostly meant for investors. So asset managers, banks, pension funds that generally come together and are a UNPRI signatory. At a corporation level, more than the PRI, probably the Global Compact is more important. Mm-hmm. So it's another group that provides guidelines on how to build a business and a business strategy that aligns with the overall sustainable development goals or the idea of sustainability. Mm-hmm. I would say in the end, those are certification. They might be of meaning for large organization, but not for small businesses. Definitely not for companies that, for example, you invest in. They are incredibly small. But it's good to have high-level standards to refer to in terms of best practices. Mm-hmm. In the end, those are mostly stamps. The idea, and that's why data is so important, the idea that you need to have some level of verification about what a company claims to do, what the company discloses, and then what they actually do. And this can happen only with big data and can happen with a level of assessment that you do recurringly, so over time. It's a great spectrum today to be in. It's not perfect, but can be perfected.
And all investment is a risk anyways, right? So. Michelle, I'm going to pass the same question on to you.
Yeah, I mean, I look at it a little bit, from an Accite perspective. We incubate businesses from the ground up by identifying, gaps in markets that fit our investment thesis, which is all around using technology as a catalyst for change, trying to create net new economic development in markets, particularly in emerging markets, making sure that we're using sustainable technology or processes at the core of the business, and in the case of our emerging markets work, also making sure that we're empowering women and youth. So to your exclusionary thesis, we specifically do not invest in natural resources, and spending a lot of time in Africa, it's actually quite challenging because a huge part of the economy is digging things out of the ground. And so we specifically set our investment thesis to exclude extractive industries as part of what we would look at. I think one of the challenges with defining sustainability, just kind of building off what the other panelists have said, is you need to have an expansive view of the value chain and the long-term impact, and you have to do kind of expansive math, right? To really look at what is all of the value that you're delivering, whether it be through your product specifically, whether it be through the supply chain, whether it be through your customer's supply chain and the impact that you're making on on your customer and their ability to be more successful, the impact that you're making on your employees, what that means in terms of their livelihoods, their well-being, and so forth. So trying to be to make it tangible and to actually lay out those goals and try to be specific about what you're measuring. But you do have to take, in my experience, kind of an expansive view of all of the things that you can measure and really get grounded in terms of who you are as a business and how you want to bring that ESG benefit to the fore.
Right, that's a lot of data to consume when you're looking at the value chain in its entirety. I guess a little bit of a curveball question, but what are you using for that? I know that Stefania talked about AI earlier. Is AI a good way to go forward and use for that, or on the ground, boots in the field, go see the factory, talk to the people?
Yeah, I mean, we've been lucky that we've been we're able to be a little bit more specific because of the types of products that we are delivering to the marketplace. So for example, with crossover meats, we know that every serving of our product saves 1.5 kgs of carbon. And that's just by looking at, it's a blended meat, so it's a combination of chicken and beef. And it's pretty simple math. It's not, it's not any crazy equation. You just look at the carbon footprint of producing beef, the carbon footprint of producing chicken. You look at our recipe, you basically do the fractional math and you've got the answer. You know what you're saving. And there it's really easy because I can literally look at the number of pounds or the number of servings that a retailer has purchased or that a food service operator has served, and I can do very simple math to say, by choosing this product, you've been able to save X kilograms or tons of carbon. With our Go Fresh business, it's a little bit more challenging because we do have this kind of expansive math. We know that through the hydroponic technology that we are using 2% of the water to produce the same products that you would do otherwise in the open field. That's kind of generally accepted math. And then we're able to extrapolate that for our customers. So a lot of our customers, for example, are safari camps, and they have their own goals. So we extend how we communicate our value to our customers in this case. And we're able to say to them that by them procuring their fresh produce from us, they're able to put a healthier and more sustainable product on the table for their guests, and they're able to cut the food miles from 1,000 if they were buying fresh produce from the open market or the vegetable market in Johannesburg versus buying it from us. We're able to reduce 1,000 food kilometers in terms of the last mile distribution. So I do think it's important that you get to be specific about how you are measuring and based on, otherwise you're just not credible.
Do you think you're saving the transportation also from the consumer going to pick up the lettuce as well? Or is that not a...
No, in this case, not so much, but we are saving transportation in the fact that we are very close to the distribution points. So by putting our farms very close to, whether it be the actual retailers themselves, we know that our last mile, we're growing the product, and then our last mile distribution is less than 25 kilometers.
Right, yeah. Okay. So when you're looking at these companies to invest in or to start, like you have, what are some challenges and opportunities that arise? You're looking at the full value chain or the system at its whole. What challenges and opportunities do you see from investing in or raising capital for sustainable investments?
Oh, it's me?
Well,
Anyway, go ahead. I'll come back.
Okay, you'll come back around. All right.
It'll be like a laugh.
Yeah, I think this idea of scalability is really important because you can make all of the important impacts that you want, and if you can't scale that business and ultimately make it profitable, it's not sustainable because the business won't exist. And I think the challenge with sustainable investing is always finding that balance between profitability and doing good, especially when you're doing impact work, in emerging markets. So scalability and having business models that truly work with that sustainability at their core is always the biggest challenge for me.
Okay. And Stefania, again, from the entrepreneurial side, what challenges and opportunities in raising capital for sustainable focus business in today's market?
I would like to address this question thinking about three segments of the financial industry.
Is your a little bit
Hello?
close? There you go.
Okay. I would like to address this question thinking about three segments of the financial industry. One is venture capital. If you are a funder in the VC space today, I mean, if you're a funder and you're looking for VC money today, literally today, it's extremely hard. Because unfortunately, with the exception of a very few super focused VC, most of the VC, for example, we do fintech right now, are going where the politicians are going, which is more towards crypto and other things. So right now, for a funder in my shoes, it's really hard to raise capital, and it's extremely unfortunate. If we think about the private space, so think about finance at investment banking level or private equity level, sustainability deals are still happening, but we see way less M&A and way less interest in, unfortunately, again, green energy deals. A few years ago, there was a lot of interest towards green energy because we all see that it was the future. We all still know that it's the future, but again, unfortunately, due to political situation, we have some level of pushback that is not helping us in any way. Because there is something absolutely important to believe in. What is good for us today and in the future is not about a political idea, but it's about what is really good for the people. And definitely moving towards sustainability and moving capital towards sustainability is key to build that future. The third things I want to say is investors in the capital markets. So investor in the capital market, here we see something slightly different. In the US, a little bit of steadiness when it comes to institutional investors like pension funds, endowment fund, or asset managers, integrating more sustainability strategies into their investment portfolios. But Europe and Asia, just the opposite. The sustainability trends, it keep happening, money keep flowing towards sustainable companies in the capital market. And with that said, I also want to add something very important that we touched base on before. It was exclusionary. So one of the approaches of sustainability is excluding specific sector of industries. But my personal view is that we as investors need to always try to find a way to finance the transaction toward a more sustainable economy. A few years ago, there was this amazing new instrument coming to the market called green bond. Probably many of you know today what is a green bond. It's an instrument issued by a company, even by Exxon, okay, or BP Oil, that was only meant to help the company transition toward more green and renewable production. We need to take the responsibility of realizing that just excluding specific sectors or saying those are horrible is not going to move us forward. What is going to move us forward is taking on the responsibility that we need to finance the transaction, which also means making sure that money continue to flow in the private sector, VC money and private equity money, but also in the capital market. There are going to be more and more instruments issued like green bonds that can enable a company like Exxon to take their time, hopefully fast, to move from oil to green energy.
So yeah, I'll just add by saying that, yeah, absolutely. I mean, we see it. Climate tech startups are facing two really big headwinds today. One is the fact that, yes, climate is very much out of favor, given the sentiment that we're seeing driven by U.S. administration and policy. But the second is even venture is coming out of favor. There's the liquidity crisis in private capital. The IPO market has been frozen for almost 2 years now. It was getting actually through it and starting to open up, and now it's back. It's back to being frozen again because there's just too much instability and unknowns. So for climate tech entrepreneurs, founders, it's definitely a challenge and to overcome. And at the same time, though, I think this could be a huge opportunity. And where we see opportunities today is that coming back to fundamentals, the businesses that are creating these solutions that it's impossible to live on Earth without these solutions are going to be the ones that are going to scale. If the unit economics and the business fundamentals are right. We have a few examples of businesses that were launched in the last 24 months and went from 0 to 5 million in revenue with high margins, right? So one of the examples is the AI platform to combat wildfires. They're getting incredible traction because communities need them. We're in an era of mega fires, and without these types of solutions, we're going to be in serious trouble, right? And so there is this huge push. It's I guess the takeaway is that it is more challenging. One has to navigate very carefully, but you could still find some interesting opportunities. And the kicker is at a very attractive valuation, because given the negative sentiment, prices have dropped significantly. So you could pick up some gems at a pretty good price today.
So I think both of you mentioned kind of the headwinds and the administration and how that's affecting. So how has that, how has your investment thesis evolved then from what it was to what it is now, or what it is going into the future? And are your returns matching your expectations?
Yeah, I mean, I'll start with that. We certainly put a lot of thought into, as climate investors, what is the future of climate investing when we see that, the current policy shifts happening with the U.S. administration, which are very significant. So naturally, we had to change some of the core areas of focus for us, and I think it's the right approach. One needs to know how to pivot quickly when situations arise. So for instance, we used to focus on mobility. That's no longer a core area of focus of ours, because a lot of EV subsidies and initiatives have been slashed, despite Elon Musk being secondhand man. I don't get that. But anyways, so mobility is no longer a focus. Anything around wind energy as well is struggling. But today, where we do see the biggest opportunities and where we're focusing most of our attention is number one, anything around energy efficiency, right? Energy demand is going to double over the next decade. There are a lot of technologies and solutions around how to build data centers consuming a quarter of the energy that they're required relative to what it is today. We're so hungry for energy that, irrespective of any policy shifts, that's going to scale and grow, in our opinion, over the next couple of years. Anything around AI, there's huge investments around AI. So many AI applications to climate, such as the recent investment we did around the wildfires. But we believe that that's going to create tremendous efficiencies, but also tremendous scalability. And then the last one we're looking at is industrial transformation, Industry 4.0 and automation, particularly on everything around the tariffs. We feel that it's going to be a catalyst for many industries to be more efficient, more lean, more sustainable. And so that has been our new areas of focus, given kind of the new era of climate investing.
Michelle, do you want to add anything? Same question.
I think, so I've been talking a lot about sustainable food, but the reality is that's not how we market our product. We market delicious, healthy, affordable food. And so I've tried to stay kind of core to, and focusing around food. We know that our food system does need transformation in order to be able to survive, right? In order for us to be able to generate enough food to feed 10 billion people. And I've been focused on investing and building businesses that kind of meet that challenge, but I don't necessarily market it that way to consumers. So if effectively we're a little bit resistant to the shifts in policy, because at the end of the day, people still need food. And if we can be putting delicious, healthy food onto the market that's affordable, convenient, and meets a consumer's demand without having to scream in their face that this is a more sustainable option, which, we've just rolled out in Walmart. I'm not sure the typical Walmart shopper is that interested in sustainability. What they're interested in is delicious, affordable, convenient food. And so while we have that core at the mission level with the company, we really focus our consumer messaging on the things that resonate with the end consumer.
Yeah, I get that. They might not want to spend the extra dollar for the, head of cabbage that might be greener or not. They want the affordable and sustainable one. So I recently, I'd say about 5 years ago, jumped from a very, owner of my own architecture firm to the corporate world, where now we're doing KPIs, which I had no idea what a KPI was until about 4 or 5 years ago. Public company, it was a startup. And now we're hit with these quarterly statements, earnings calls, right, that we have to, speak to the public. So the next question, and we'll start with you too, Michelle, and then we'll come back down the line, is how do you balance that pressure from these profitability and these short-term gains, everybody wants to see the stock price go up on their investments, against long-term environmental and social benefits?
Well, I think I'm fortunate in that I work in a lot of early stage companies. Mm-hmm. So I think the pressure on, kind of over quarter performance is less in terms of myself and the other investors, know that we are in a long game, right? So it's really about taking making sure that we have a strategic vision in terms of where we want to go. Mm-hmm. And we're playing that long game, but that we're executing the short game and growing sales and doing the things. So I'm lucky that I'm not facing that right now on a quarter by quarter basis.
Yeah. Questions open to anybody who wants to add to that in terms of short-term gain and short-term profitability to long-term environmental and social benefits?
I have never liked this type of question, because to me, when you invest with a sustainability idea, you know that you are creating economic value and also social and environmental value. The problem is that economic value, it's easier to calculate. We have specific formulas. We know we've been doing this for decades. When it comes to environmental and social impact, or the value that we create, it's slightly harder, and also it's peculiar to the single company. But doesn't mean it's less important. And then we also think about, maybe long-term this is true, but short-term it is not. No. If I invest today in a company that is creating solar power, or it's transforming the way we access information, so they're creating an approach to democratize the way we access data, is still an impact. So I am not a huge believer that this is a dichotomy, is a question that we really should address, especially even when it comes, let's even think about the capital market, where you see a lot of volatility. There are so many studies that show you that sustainable companies, even in terms of a volatile market, are more resilient. So that can be short-term and long-term.
Makes sense. No?
Yeah, I'll just add that companies that treat ESG as an add-on, that's not really a sustainable model, but the ones that really embed it into their core strategy. We've seen this time and time again, sustainability and profitability can go hand in hand. But it is true, though, that biodiversity does not work on a quarter-by-quarter metrics, right? They work with very different cycles. And so meshing in biodiversity, ecology, science, and quarterly statements, frankly, doesn't make sense, to Stefania's point. We try to do the best we can with it, but I think we need to really think about the long-term strategy in parallel with short-term. And you could do that actually with blended finance, right? So you could kind of take care of a lot of the capex and the things that take longer to devolve with non-dilutive pockets of capital, and use the equity capital markets dollars for the higher growth phases. So that's kind of how we play with this challenge.
Mm-hmm. So I think you had mentioned earlier about your evolving thesis and where you think it's going to head, and that's where I'm going to go with this next question is, looking ahead 5-10 years, where do you think the money should flow, right? What sectors or innovations do you believe will drive the next wave? And we talked about AI, right, and crypto and things like that, but not only knowing that, but where should the money flow to support that, to support those activities, right? And then where do do you want it to go? That's the other question. Anybody, please.
All right, well, I'll take a crack at it. So I think that, well, it's not what I think. So yeah, our belief and the way we think about the world is that there's two massive risks really on the horizon. And one of them is the power and the energy risk. We're going to be facing tremendous outages. There's a lot of risk around power failures and power outages going forward, simply for a few reasons. Number one, because of threats, geopolitical threats, but two, or cyber threats, but also just given the fact that energy demand is going to grow so fast with data centers, with the rise of AI, and the grid capacity is just nowhere near where it needs to be to match this demand. So I think the technologies that are going to be able to solve these issues are going to scale the most, because we need it to survive as a society and as an economy, not because we're tree huggers. But at the same time, that's going to create tremendous sustainability metrics as well. As for example, the technology we're currently looking at, which is able to reduce data center energy consumption by 4 times, which is very significant. So that's one. And then the second area where we think we're going to see huge advancements in growth is, we're facing tremendous natural disasters, whether it be forest fires, whether it be hurricanes, floods, etc. So AI solutions that are able to not only forecast, prevent, but also mitigate these risks, I think is going to be key, because otherwise we're going to see massive wipeouts of communities across the world. So again, I think that when our back is to the wall and we have no other choice, we're going to rely on technologies that are going to help us get to our survival, and these are areas we think will make also the biggest returns. So that's what we're betting on.
Okay, I'm getting a little scared, with all the power grids going down. Any comments?
I don't think that sustainability should go by momentum, which means, okay, in this specific time, we should invest in this area. In this other specific time, we should invest in this other area. I think sustainability is a total mind shift in the way we operate and think. And it goes in every single business. It goes from the way a bank is operating today to their gender equality policies, to their investment policies, to their lending and credit approaches, to an energy company that needs to move quickly toward green energy. So my idea of sustainability is that is the way to progress. It is a shift that actually needed to happen already like years ago. We are, as I said in the panel before, we are breathing polluted air. We are eating fish that has eaten plastic in the ocean. And unless we change the way we operate and build our business and an economy, it's going to get worse and worse. So my idea to sustainability is that it needs to be a principle that is integrated right now in every single aspect of the society and the business.
Okay, so basically tackle everything at once?
Yeah, it's a principle of acting.
Mm-hmm.
But we are coming from different perspectives, because he is, of course, is an investor, and VC, especially VC, they go through momentum. So they think, right now, transitional economy, industrial transformation is key. In 2 years, AI, Gen AI is actually key right now. So I think as a society, we really need just to believe in, the way we're doing business today, the way we built our society, is it okay? Is it sustainable long term? Will it enable us, that we are 20, 30, 40s today, not die of cancer because we are eating plastic? Do you know? If we take a scan today, each one of us, we have microplastic in the brain. That's scary. But it's the reality. Is this the way we want to progress? I don't think so.
Yeah, I heard that at the lunch too, and I was starting to get scared too. We got microplastics in the brain. I'm gonna have to do some more research. Michelle?
So I've talked a lot about food, but I do think it's a really important sector that we have to focus on, both in terms of continue to transform our food system in developed markets. Like the US and Europe, we are really dominated by large industrial, vertically integrated farming companies, and they make a lot of money. And so how do you motivate them to put in place the changes that are required to be more efficient and effective in producing the food that we eat? I mean, science and food is always, it's got an interesting intersection, right? Because people don't want frankenfood, right? I mean, if you look at cultured meat and some of the other innovations that are coming, you've got to really question, are people going to adopt this? Is this really scalable? So trying to find those right solutions. Regenerative agriculture is fantastic, but it's not scalable. We can't solve our current food problem by shifting everybody to regenerative agriculture. The other area that I think is, from a food system perspective and from a general economic development perspective, that we don't put enough focus on, in my opinion, is African emerging markets. So, 25% of the world's population by 2050 will be in Africa. Africa will be home to at least 4 of the top 20 global cities. The amount of investment that's flowing right now into Africa in terms of sustainable businesses is just insufficient. And it provides an opportunity for us to leapfrog to new solutions. right? Because there is such a dearth of solutions and focus around trying to solve some of these problems, we have the opportunity to say, okay, if this is the energy system that we want, if this is the telecommunication system that we want, if this is the equitable financial services industry that we want, it's a little bit of a blank slate in terms of being able to transform from, no phones to cell phones and mobile banking, to go from low protein consumption to maybe a protein consumption that is more healthy and more renewable. And just yesterday, there was an article talking about a potential significant cutback of the U.S. Department of State in Africa and the closing of a lot of embassies and consulates. And so it's very clear from a political perspective that the current administration is taking a step back from Africa. And I think in many ways that actually creates an opportunity for the private sector is going to have to step in and try to start driving the changes that are needed to create a stable, a sustainable continent.
Wow. Thank you very much. Thank you to all the panelists on here. Let's give them a round of applause. I think we're good on time. All right, perfect.